All right. Good evening or afternoon or morning, wherever you're at. So I asked yesterday a lot of people what the number one thing they want to learn about is. And at this point in my life, I can talk about 500 topics. But one of the biggest things was tax strategies. So, and if you're like, I just work a job, I don't do taxes, I'm a W 2, this still helps you. This is for everyone. If you want to pay less in taxes, listen on. All right, so I'm going to tell you a little strategy. I'm going to tell you the theory of it. Obviously, let's do some disclaimers. This is not tax advice. Consult your tax professional. You obviously should have a CPA. If you have a good CPA, they are saving you more money than they cost. If you need a referral, let me know. But everyone should have a CPA. And if you're like, I can't afford it, if they're good, they will save you more money than they cost. That's how this goes. Um, so you definitely should have a CPA. And then you pay the CPA, and then you make all that money back in your tax year rather than you doing yourself and paying more. First off, how many tax strategies are we going to do here? We don't have a whole lot of time. So we're going to start with just one simple tax strategy. So this is one where, okay, let's just go over it. All right, go to the IRS website, get an EIN. They're free. Do it in something you love, one of your hobbies. An easy one is food, restaurant, something that you might have a business in the future, something you're interested in, a hobby, whatever it is. Um, and also, it doesn't really matter. The IRS doesn't like force you to stay in your one category. So if you mess up there, don't worry that much about it. Again, obviously, run everything I'm saying by your tax professional. If you don't have a tax professional, hit me up. Um, so you're going to create your LLC, then you're going to go form this business in whatever state you're in. Actually, it doesn't even matter. I know Colorado is like $10, sometimes $100. They change it. Wyoming's a good one. Yada yada. None of this matters that much. Again, ask your tax professional. So the whole point. So let's just say you did food, right? Say you like to eat out a lot. Well, now you can start a business in the food industry. You can start a business that is, maybe it's like Yelp, where you rate restaurants. Maybe it's a food blog where you do some work and you try to make money that way. Maybe it's taking pictures and posting online, like all you little foodies love to do. All of that can be a business. A social media influencer is a business, so you can literally post your stuff online, and there is no law that you have to run a good business. So here's the entire point of it: you can run a business at a loss for 7 years. So you can have 7 years of running a really bad company, and all that does is operates at a loss. And that loss you get to apply to your taxable income. So let's see if you know what that means. So let's say you make 50,000 a year. Let's make it 100,000 so it's nice and easy. You make 100,000 a year, and your taxes are, let's say, 30,000. Now, if you start a business, a food picture business, a influencer business, a food rating business. Maybe you try to do marketing for restaurants. Whatever it is in the food industry, you now can write off meals that you're using for your business. So this is the big thing. You got to make sure you talk to your tax professional. I'm going to keep saying that because your CPA is who's going to tell you this. So now your tax professional will let you know how to align, do this or that, S corp, LLC, however you want. But what you can do is for 7 years write off virtually anything you do for that business. So if you love to take pictures of food and put it on social media, you can write that off if you are trying to create a food blog or a food influencer brand. Anything of that sort is a legal business by the IRS. And if you are attempting, there is no law that says you have to be great at business. You can be bad at business, and so you can write off those losses as long as they are for your business. So if you're going out to eat and you're taking pictures, you're trying to promote it, you're trying to build your social media brand, you can write that off. Talk to your tax professional, make sure your situation's all right. So don't forget that it has to be used for the business. If you're just taking pictures and posting it anywhere, you have to make sure that your business is targeted for that. So that was an easy example. Let's go to another one. Let's say that you're a car, you want to do a car blog. Anyone can open a website almost for free. Shoot, you could use AI and make a website and do a car blog that's going to cost you maybe $10 a month. But then all your car expenses, and if you're taking pictures and writing blogs and actively trying to make a business out of this, you can be bad at it. You can lose 10,000 a year. You can lose 20,000 a year, and that's money you are already spending. If you already spend, let's go back to the food one. It's simpler. If you spend 20,000 a year eating out, and now you're gonna take an extra 5 minutes per meal to take really nice pictures, post them on your socials, maybe create reels, and you're trying to become a food influencer. Well, that 20,000 you spend on food already, you can now move that to a business loss, and you can take that away from your taxable income. So here's how you originally were doing it. Let's go back to it. You make $100,000 a year. You spend 20,000 on food, and that's after taxes, right? That's how most of you live. So you got $100,000. You pay your 30,000 in taxes. You're at 70. 20,000 on food. You're at 50. Here's the new way of thinking. $100,000. You don't pay 30,000 in taxes because you take 20,000 against your taxable income because your business, your sole proprietorship, operated at a loss. So that brings you down to 80,000. Now you pay taxes on that. What's a third of that? We did 30,000, so 30%. So that's like 24,000. So that'll bring you down to like 56,000. So just by switching that one little thing, you save 6,000 a year. Now imagine you multiply that. And there is no law. Now, consult your tax professional. But there is no law that you can't have multiple businesses. So if you spend 20,000 a year on food, that could be one business. You could try to be a food influencer, food blogger, foodie. You could try to be a food marketer, restaurant marketer. You could do all sorts of different things in the food industry that businesses want and restaurants want. You could be a food website builder. You're just really bad at it, but that's what you're trying to do. So as long as you are trying to actively run a business and generate revenue, you don't have to, there's no law that you have to spend 40 hours a week on it. You can spend 3 minutes per meal and then write off that meal as a business expense, as long as you're actively trying to, again, talk to your tax professional. So this is one, so you can do this with food. And if your tax professional agrees, then you can move it to your car. You can say, I use my car for a business. I'm trying to start this business around my car. I shoot live videos while I drive, and it's all about my car and this and that. And if it's something that your tax professional agrees the IRS will accept, you can now have a second business, and you could write off all your car expenses. So your food business can lose 20,000 a year if that's what you spend on food, and you can do that for up to 7 years, and then your business has to make money. You can't do it forever. So then your second business could be your car. Third business could be clothes. Maybe you're a fashionista. Maybe you buy it and you take pictures and you go live in new shirts. Hint, hint, buy this shirt, millionairesaremade.com. And maybe that's your third business. And now you write off all your clothes. Now, at this point, it's maybe red flags for the IRS, and they may audit you and say, we need to check to make sure everything's a business expense. But if you have a great tax professional, they will be able to give you great advice on how many this or that and what you can do. Maybe you want to be a model. So now your business, your haircuts, makeup, all of that is you trying to run your business as a model. And you may lose money because you spend $5,000 a year on looking good. Good looking you. But now that $5,000 is that negative $5,000 expense is applied to your taxable income. So the main goal is trying to get everything you already spend into a business expense, so that then it lowers your taxable income. If you have questions on that, feel free to ask. But also, again, talk to your tax professional. It's a strategy that can be used. I've used it millions of times. I have dozens of failed businesses. Oh boy, we don't even want to get down that rabbit hole. I have tons of failed businesses, and they operated at losses, but at least they reduced my taxable income, which is helpful. So that is one awesome strategy on how to reduce taxes. I wasn't going to do any others. I was just going to do that one for a while. Anyone have questions on that? What else should I talk about tomorrow? A lot of people talk about tax strategies. Well, I mean, here's a huge one. So now you open your LLC, right? Everyone should have an LLC. If you don't have an LLC, go buy one. They're like $10 a year. EINs are free. You can figure it out. IRS.gov. Apply for a new EIN. It's simple and easy. And then register it. Colorado's a pretty simple state to register it. I've done probably 150 business registrations there. Where else have I done? Utah, Wyoming. Colorado's easiest. Like it's like click 4 times, pay $10, you have a business. You can go get a business bank account, but that's also again not required by the IRS. You don't have to have a bank account if you don't want to. And if you plan on only working, 15 minutes a week, and you're not going to make very much money, but you're going to try, well, that's a legal business. There is no law that you have to make money. You can run a business, and it can suck. And if it sucks, it also reduces your taxable income. And that is the tax strategy that we're aiming for here. Again, consult your tax professional. If you have any questions, drop them in the comments. Otherwise, that's all I got for today. That's your tax strategy. If you want to hear more, let me know, and I will post another one tomorrow.